Hello, guys. I'm Mariano, the Trading Parrot. Today is a very special day. I'm very excited today to have this special guest waiting here. Is Benjamin Cowen. How are you, Benjamin? Good to have you in the stream.
Pretty good. Thanks for having me. Pleasure to be here.
It's pretty exciting to me actually because as I was thinking that 4 years ago, when I was just getting started with crypto, one of the first thing I remember is tuning in YouTube and watching random videos and finding one of your videos and before even knowing what was your name or whether the channel was important or not, I found that very interesting pattern. And I have an eye for patterns and I fell in love with the pattern. I still cannot remember which one was it, but I posted to my own social media and people started telling me, hey, you are stealing stuff from the big Benjamin Cowen. And, and that was the beginning of it. After that, I subscribed the channel and I continued to watch it up until today. I have learned so many different things, so many different perspectives. So for that, really thank you. Today I have prepared for you not just technical questions that are actually coming from people asking me in social media. I ask everybody, what would you like me to ask Ben, so we can have a discussion together. But I also have prepared a few personal questions, and these are all new to you, so you don't know what I'm going to ask you. Feel free just to push back on any of the questions. What were you doing before crypto, Ben?
So before crypto, I was in academia. I got my undergraduate in math, my PhD in nuclear engineering, and then I did a postdoc at a national lab in high energy density physics. And then I was a senior member of the staff at the national lab. And during that time, I started my YouTube channel, and I decided to try to make some sense of all the volatility and whatnot, and basically created risk levels for different cryptocurrencies. And then eventually my company, my channel just blew up, and so I ended up quitting my job, and now I just do this. But my prior life was basically just academia.
So I'm hearing some echo in the audio. Uh, Ben, if you go to the audio settings, if you can, unless you,
What do you need me to do?
so if you go to audio settings, there's an audio settings, and in the audio it's got the echo cancel.
Yeah, I have echo cancellation on.
Okay, you have it on. Okay, cool. Let's continue. How is the audio for people? No echo on your side. Okay.
Yeah, I don't hear any echo.
Let me try this because okay, let's do it like this. Let's hope that there's not gonna be another problem with the audio. And the, the second question is, how do you unwind in terms of hobbies and activities? It's a very intense day to day, having to post on social media and do all the videos. I see that you post videos overnight. In my time zone, I get the videos at different times. So, what is your process to unwind, and what sort of activities do you do?
I like playing chess. That's probably one of my favorite things to do. I like following the chess world and following the different tournaments there. So back in grad school, I would actually just have these like 7 hour chess games in the background going, and I would sort of vaguely watch that. Also, I like to play various sports. I enjoy playing like soccer, basketball. I also like playing, ultimate frisbee, but I haven't played that as much over the last few years. I also like playing things like disc golf and tennis and pickleball. And then also, I spend frankly a lot of time with my kids. I have 4 kids, So that's honestly where most of my time is spent. Um, so rather than doing a lot of those things that I used to do, it, might involve me trying to do that stuff with my kids or taking them to their soccer games and teaching them how to play chess and that sort of stuff. So a lot of it is with my family and my wife too. But obviously, 4 kids do in fact take up quite a lot of time, but it's a good way to sort of get my mind off the markets and focus on something else.
That's pretty cool. Um, let's go into what's going on today. We just finished the CPI meeting. Why is it good news? Do you think, first of all, do you think it's good news? Because I remember earlier you were saying today good news is good news. Do you still think is good news the outcome from the meeting?
Yeah, I think so. Basically, we've been in ever since the Fed cut rates in September, the long end of the yield curve has been rallying, right? The 10-year has been going up. Even just yesterday, the 30-year yield was breaking 5%. So when the labor market, we basically have two things that are affecting a long end of the yield curve, two primary things. You have the labor
Yeah.
market on one hand, and you have inflation on the other. And as long as inflation is coming in at or below expectations, I think the argument is that that's going to be a reason for the 10-year yield rally to take a break because the 10-year yield has been almost nonstop going up since the Fed started cutting rates with maybe a couple week lull in between. And so I think it's
Mhm.
kind of the opposite of the labor market, right? When the labor market results come in, good news is bad news. And the reason for
Exactly.
that is because the Fed's cutting and if the unemployment rate's going down, that could be a sort of a tailwind for wage inflation, and wage inflation means you might see inflation continue to go up. So in that sense, good news is bad news in the labor market. But with inflation right now, I think good news is actually still perceived as good news. And again, I think the reason for that shift from what it was doing last year to this year is because the Fed has been cutting rates, right? And we're at a very interesting time. Can I share my screen?
Yes,
Um,
there's a button in the middle for sharing screen.
okay. So if you, I don't know if you guys can see my screen, but if you
Yeah,
look
we can.
at inflation, if we just sort of pull this inflation data up, it has been going up recently, right? It has been going up, but core inflation has been dropping, or at least it dropped this last month, which I think was perceived as a good thing. But the thing about inflation that I think the market is going to care about is, do we get a repeat of the 1970s? Now, my base case is that the 1970s do not repeat exactly. And the reason for that is, back in the 1970s, where we had multiple waves of inflation, we also saw the unemployment rate going down into that second wave of inflation. Whereas over the last year, we've been seeing the unemployment rate go up. So if we do get a second wave of inflation, it's probably not going to be due to the labor market if it happens in the short term. But you can see the ramifications of inflation going up. At first, the market didn't care. This was back in 1972, an election year. It was just slowly going up. But then when it went from like 3.8% to 4.8% in a single month, that was really bad news, right? And then the market ended up selling off as it prepared for another wave of inflation. So I think for now, as long as inflation is down here below 3% or increasing very slowly, it's one of those things where the market is going to shrug itself. It's going to try to shrug it off, right? Because it's still below 3%. It's not like it's guaranteed to go up. Um,
Mhm.
and I don't think it's going to care about that until you actually get a month where it goes up a lot. I mean, like if the inflation rate came in at at say 3.5%, then the market would be selling off aggressively right now. But because it came in at expectations, core CPI went down, it's allowed the 10-year to drop. And as we saw back in 2023, whenever the 10-year drops,
Yeah.
risk assets like Bitcoin tend to go up as long as the 10 years dropping for the right reason. And now the 10 years dropping for the right reason, right? Dropping because inflation is okay is the right reason. Dropping because the labor market is getting bad or the unemployment rate is skyrocketing, that's the
Yeah.
wrong reason. So because we're
Yeah.
dropping for the right reason, risk assets have seen a nice move up. And basically Bitcoin, essentially just swept the range low back at 90K, and now it's back, it's basically rallied back up to that lower high structure that's been in place since the beginning of December.
True. And from another perspective, we got the balance sheet in here. And I noticed a few days that we were putting the same low as in September in the balance sheet of the Federal Reserve. And after this sell that occurred at the end of December, it went all the way back up, potentially putting a double bottom in here. The reason I'm monitoring Federal Reserve, the balance sheet, is because I'm on the expectation or on the hope that eventually we're going to see it entering into quantitative easing. Do you see the conditions at the moment supporting a potential setup in here for adding to the balance sheet into 2025, or do you see other aspects or metrics potentially contradicting this thesis?
I think in order to get QE, which we will likely get at some point, because, essentially the markets are addicted to it, and the government, it's basically like, the Fed, like that's their tool to sort of get things moving if something bad happens. So I do think we'll see it. If I had to guess, I would guess that the Fed will end quantitative tightening this year, is my guess. Now, that doesn't mean they necessarily flood the markets with liquidity immediately like they did in 2020. It could be something like 2017, where the balance sheet is just relatively flat for a while. But you could argue that a transition from quantitative tightening to just a flat balance sheet by the market could be perceived as as QE, just to be something different. And it's kind of why we saw Bitcoin dominance go up for so long and alts bleed against Bitcoin for so long. In my opinion, is basically just because the Fed kept interest rates higher for longer, like they said they were going to do,
Hmm.
and also um, the quantitative tightening never ended. Right? I mean, think about how many calls for alt season that there have been since 2022 began. And
Yeah.
and really, if your definition of alt season is altcoins durably outperforming Bitcoin, you've been wrong about that. Now, if you picked out certain altcoins, it's absolutely true that certain altcoins have outperformed Bitcoin, and the goal is to try to identify those altcoins. And if you're going to take on the risk of anything besides Bitcoin within crypto, try to find the altcoins that are outperforming Bitcoin, which are few and
Yeah.
far between. But
Yeah.
the issue is that collectively the altcoin market has underperformed Bitcoin ever since quantitative tightening began.
That's true. And I wanted to ask you because probably if I ask people, what do you think Ben sees as a triggering point for altcoin season? Many people are going to probably refer to Bitcoin dominance. But I'm pretty sure that for an altcoin season, the equation to get that is not purely based on the Bitcoin dominance, at least not as a leading indicator. Possibly some other pieces, ingredients in the soup are required to get that altcoin season. So apart from the Bitcoin dominance, which I will also like to hear your opinion in this last move up into 59%, I think. Um, what would you say is missing apart from, because Bitcoin dominance looks like ready for the picture, right? It feels almost ripe for coming back down and doing what it's got to do, but what is missing for that, and how long could it drag still if those conditions are not here?
Yeah, so this chart here shows the altcoin season index. Um, and the reason why you really haven't had an alt season, or it's been so short-lived just based on the data, is because we haven't really spent that much time where altcoins are durably outperforming Bitcoin. You can see that really there hasn't been a durable rally by alts against Bitcoin since 2022, and even that was in the middle of a bear market. So that's the reason why the market feels so bad right now in terms of alts, is because the last time we really had an alt season was back in 2021. In fact, and I'll get to your question in a minute, but I just want to set the stage for it. If you look at the advanced decline index for the top 100 cryptocurrencies, it basically shows you the number of cryptos advancing versus the number that are declining. You can see that
Hmm.
last cycle, we know that the Fed started quantitative easing right here in September, and then
Yeah.
the ADI started going up from basically December 2019 until November 2021. The reason why this bull market has felt different than what a lot of people experienced in like late 2020 and early 2021 is because a lot of the altcoins have actually been not doing well. Like they've been spending more time dropping than actually going up. And it's basically Bitcoin and a few altcoins and meme coins that have been, kind of carrying the market, where a lot of the stuff in between hasn't really been doing so. So your question is basically, well, how are we going to get QE? I think the only way you're really going to get it is if there's a really good reason for the Fed to start it. Okay, right now with the Fed, um, with risk assets doing relatively okay, it's hard to really justify quantitative easing. You could maybe justify ending QT and just kind of keeping a flat balance sheet, but it's really hard to justify, flooding the markets with liquidity when risk assets are basically near all-time highs and the unemployment rate isn't really making that move higher, right? At least it hasn't yet. Now it could, and if that happens, you would likely see the market get spooked. Now I want to show you something. I'll show you something that could induce quantitative easing. Everyone's pretty familiar with the S&P 500, right? I mean, it generally goes higher with time. And the reason is because they're never going to stop printing money, right? So, I mean,
Mhm.
you can look at the S&P divided by M2 and see exactly what I'm talking about. How
Yeah.
the S&P is basically at the same level against the money supply that it was back in the
Yeah.
1990s. But in this case, the way you get QE, I would assume, would be if something were to spook the market. Like, let's say the unemployment rate came in at 4.5% or 4.4%, right? Something that the market's not expecting. And then you had sort of a sharp sell off by the market. Then I could see the Fed saying, all right, we need to begin QE. In fact, if you look at the S&P divided by M2, this is exactly the level in 1998 where there was a sharp sell-off. Now, hopefully, we don't repeat exactly that, but if you had something like that, right? If the market got a scary data point for, at any part, like whether it was a scary inflation print, a scary unemployment rate print, if it got a scary print and it made the Fed worried, I think that would cause QE to come back and it would likely lead to alts durably outperforming Bitcoin for longer than just a few weeks.
Yep. I have a specific chart I wanted to share with you. It's this one. One second. This one. It's a combination between the timing of each of the rallies in each cycle and also the uh, how intense it is. So we have the RSI here, and this is a monthly chart. What we can see is that each and every cycle we have not just diminishing returns, we could say, but also the timing is constricting. The time we spend above 70 on the RSI. In this cycle, we spend almost 400 days, then a bit above 300 days, around 200 days, and I did just a linear regression and I got 90 days. And those 90 days have been actually miserable because we crossed about 70. We got to 72 with this candle there. This is 1st of November. And then second month is December. And we ended up closing slightly below 70. And this month we are slightly above 70. So I, I was expecting when we enter into this 70, I was pretty excited. I was saying, okay, fair enough. We're going to get possibly a shorter term above 70 this cycle because it's been diminishing in time. But the intensity, the magnitude of the move above 70 has been extremely shallow, giving me the idea that maybe this is not the instance that we're going to get. Maybe it's going to come later after a pullback. But at some point, I will expect that something needs to make it up for this, because otherwise the picture looks extremely broken as a cycle to just this being the actual RSI top in the monthly chart, in my opinion. Do you think that something like this could end up the cycle like this, or or would you say that the approach of the timing is irrelevant in your opinion?
I think like I mean my base case for anyone is that markets are completely unpredictable in the short term. We can feel very opinionated about them and sometimes we're right, sometimes we're wrong. I think the better thing is to say we don't know if the monthly RSI will hit that trend line, but if it does, it's probably the cycle top, right? Now,
Yeah.
it's possible the cycle top could come before that if something bad happens, right? We had a black swan last cycle. We had the pandemic drop, which we printed our way out of very, very quickly. But I think that's how you sort of say it. You say, I don't know when the monthly RSI is going to hit it. I know that in last cycle it hit it in April of 2021. I know the cycle before that it hit it in December of 2017, and the cycle before that it hit it in November of 2013, and in April of 2013, and the cycle before that it hit it in 2011. But you don't know. We don't know when it's going to happen. You could also look at the same RSI, look at the 2-week RSI, and you could argue that we already tagged the trend line back in March of 2024, but we've gone higher since then, making it seem kind of similar to what happened in 2013, where the 2-week RSI tagged that trend line a couple of times, right? It tagged it, kind of had like a mid-cycle top, and then it tagged it again later on. Um, so yeah, it's one of those things where predicting exactly when it's going to happen is impossible. You could argue that had the 10-year yield not rallied, like maybe if the Fed had not cut rates in September, it's possible that what you said could have very well played out, right? Where it would have already been going up to that trend line. But I think the market, kind of like what happened around, sort of the change of administration in 1972 and I believe in 1968, the market is just having to grapple with the idea of, you know, is the macro soft? Is this a soft landing or is it not? And I think it's because of that uncertainty, it's caused the 10-year rally, and it basically took the wind out of Bitcoin sales, which is why it's arguably taking longer.
Yeah, to me, this cycle, it's upside down with 2021. I constantly think how the conditions were so perfect for retail to get bullish on crypto assets, and not just in terms of the actual cash flowing into the system from all angles, inflation and all these things, but also there were less coins as well. There was more um, density of assets, so therefore it was more easy that something could hold and not just pump and then dump. Um, in this cycle, it's kind of the opposite. We were hoping in 2021, everybody was saying next cycle is going to be the cycle of institutions. And all I have to say is be careful what you wish for, because now thinking about me in 2021, and I was enjoying that. I was enjoying all the liquidity coming in. Pretty much every single thing was pumping. And I remember watching your video in 2021 when you were saying we went too high, too fast. In around, I think around March, possibly you started saying something like this. And that started, resonating in my ear. It was partially the reason why I started developing different indicators to try to see that from my own perspective. I'm a coder, I'm a software engineer, so I wanted to code things to confirm this hypothesis from different perspectives. And I started accumulating signals all over the place. And I told my community, we have to stop the bots. We have to get out of the market. And part of that was influenced by these calls. We went too fast, too high. But in this cycle, in the cycle of institutions, we also have a similar symptom, right? Because before the halving, we got already an all-time high. And if we look at some of this, let me share my screen, and just in 1 second, this screen here. So I think it's with the VIX. No, it's with the DXY. For example, this one, we got already one move up, then another move up, and then this move up. It feels almost like it's done in here, but in the ratio of the VIX, it's almost showing that is diminishing the momentum relative to what we did in March, which is seems to be calling for some sort of cool down at the moment.
Yeah, and I mean, it's always possible we get a cool down. In 2017, there's been a lot of similarities between this cycle and 2016, 2017 cycle. In 2017, Bitcoin actually had a pullback around this time to the summer high from the prior year, right? Because Bitcoin went up to around 1100, and then it pulled all the way back down to like 700. So it had a
Hmm.
larger pullback. I think the counterpoint though is it actually bottomed January 13th or January 12th, kind of
Yeah,
around the same time we've seen this wick low right now. I think the reality is that there's a lot. I mean, even if you look at liquidity, like a lot of people, I think I'm sure you've seen it on Twitter where they sort of track the money supply and they have
yeah,
the lag on that with Bitcoin. There's a lot of indicators that would suggest that we very well could have a correction. Um, and if my argument is that if we did have a correction, kind of going back to your question earlier, that's probably what would introduce QE again. So I think the Fed is, but I don't think the Fed wants to start that too soon and then risk another wave of inflation. I think one of the reasons why you kind of see the diminishing indicators, the market is still look. I'm kind of all over the place, but the three market cycles that Bitcoin has had have all been right translated, right? Where the peak is 1 year before the bottom, right? The peak
mm,
was in, Q4 of the post-halving year. We've all seen right translated cycles. There is such a thing as a left translated cycle where the peak occurs kind of halfway through, like around now, right?
yeah,
Um, you could argue that a correction right now might actually help us avoid a left translated cycle, right? Like if the market can cool down for a little bit, which it has been, and stay cooled off, it might help us avoid a left translated cycle if the market can kind of regroup and then slowly go up. But again, you could have argued had your monthly RSI chart played out 90 days, that could have easily just been it. Like if
yeah,
Bitcoin were at like 150K right now, um, and you had every indicator known to us triggering, right, like the pi cycle top indicator flashing, all that stuff. I think that is kind of the argument. But um yeah, I mean, those are my thoughts. I think you're right. We certainly could have a correction. If you look at January 2017, January 2021, we did have 30% corrections. So far, it's only been about a 17 to 18% drop.
yeah,
Um, but we've also seen this cycle, the drops haven't been as bad as 2017 as well. So I think you make a lot of sense. But remember, markets can be very irrational for very long periods of time before they reverse to whatever maybe they should be at.
yeah. It's true. And I think one of the things that sometimes my audience struggles to follow in my channel, particularly the new viewers, is that I cover long term and I mix that with day trading. I mix it with swing trading. So I look for opportunities. For example, on Sunday, uh, I have the mixed bag of I know there is downside. I know we can hit 88 to 85. There is liquidity there. We can go to 75. And I even watched your video where, where you were indicating maybe we can go to 68, 69 and go to the scene of the crime. And yeah, that woke me up and I said, okay, yeah, actually, yes, we could go out there. How do I prepare myself? How do I take advantage of that on a swing trade to not stay on my hands and do something? That's me. Every trader is different. Some people prefer just to hold. I know you buy at low risk and then you sell at very high risk. And I actually have a question about that. What's your current strategy? But personally, I like to take these swing trades and get into areas where the micro risk in the short term becomes too high and you have to really close your deal. And I have a feeling that if we get back into closer to all-time high, we're taking a lot of risk there. There are liquidations higher from 120 to even 130, and people are calling for those levels. And definitely, market maker is interested in getting there to get all those shorts out of the way. But I don't see those levels at the moment with the indicators as something that we can just go to 200, 250. So if we got there and I trail my trades into those areas, I'm looking to take profits. And if we go lower, I have my orders to find a lower, a more humble exit as well. And that is because those indicators are becoming very exhausted, and because, again, we did too much too fast. And that is kind of harming the performance when we compare 2025 to 2021. If we compare what we did in December side to side on a daily chart, and we compare again January, and then we put next to it some MACDs, some RSIs. MACD in 2021, at the time of December 2020, it was at around 500, 600, if I remember. Uh, this cycle, we were already at the 6,000s or 5,000s, numbers that are very extreme. So it's almost like trying to squeeze the last drop of juice from the lemon.
Right.
At this point, it feels a lot more like an 80%, 90% of the cycle. And that's why I keep insisting, yes, I am long, but there's a lot of risk on the street. So my strategy is, it is definitely not the same I used to have when we were in 2023 or getting close to a bottom in the market.
Yeah, I mean, look, I think it's possible Bitcoin could go back to 70K, but I would also argue that that's sort of like the worst case short-term scenario. Um, in order to see something like that, you probably need to see the 10-year yield break through 5%, would be my guess. Um, I would also argue that as long as we're above 90K, um, it shouldn't necessarily be like the thing that people are concerned most about, right? As long as we're holding those range lows, if you go back to when the 10-year yield was rallying like it is today, you'd have to go back to July to October of
Mm,
2023. During that time, what caused Bitcoin to give back, let me share my screen so people actually see what I'm talking about.
yeah, go for
What
it.
caused Bitcoin to actually um, give back its gains was, so let me show you what I'm talking about. So uh, here's Bitcoin, right? And you can see that Bitcoin has been holding these range lows. The reason we compare it to last year is because it looks so similar, right? I mean, it seems like
Yeah,
almost the same exact thing. um but the other time to compare it, which maybe isn't as obvious, but it would be right here where there was also a range low. And the only reason I compare it to that moment as well is because if you look at the 10-year yield, that was when the 10-year yield was also breaking out in a very similar way as it is today, right? And that is why I at least mentioned that idea is as the 10-year goes up, Bitcoin can struggle. And then Bitcoin didn't really start moving again until the 10-year yield topped, right? When the 10-year topped, that's when Bitcoin had its next parabolic rally. But I wouldn't really argue that the 70K scenario is the most likely one unless we get below 90K and stay below it. And so you can see in 2023, we basically bounced off of these range lows a number of times. Then eventually we fell below it and then we stayed below it. And that was sort of the sign that we were going to give back the gains. And that, I think, is the thing to consider with Bitcoin. And it's not to say that it has to do that.
mm,
It's just to say that, look, you know, if the 10-year yield picks back up in a few weeks and Bitcoin can't break out to a new all-time high between now and then the likelihood would go up of an outcome like where it could do something like this, where it goes up, sideways, back down, and then has to consolidate for longer and then go up, right? Because that's what it did back over there when the 10-year yield was breaking out, right? I mean, it had that drop. And what's interesting actually is that the S&P already did that, right? Like if you look at the S&P 500, it already gave back all of its post-election day result gains,
yeah.
and so did the Russell, right? So did the Russell. So if anything, Bitcoin has been holding up a lot better because Bitcoin, with the election, Bitcoin was all the way down here, right? I mean, at like
Mm,
70K. So if anything, Bitcoin is holding up better in the short term. I like what you said, though. You made a comment about like there's risk, right? But you still have to be in the market somehow, right? And I think that's a good thing to live by because over a long enough period of time, it's if you had to pick one, it's better to be a perma bull than a perma bear, right? Because the
yeah.
markets over a long enough period of time do go up, right? Um, So the bulls are rewarded more often than the bears. So I think what you do is you say, all right, I don't know what's going to happen in the market, right? I wish I did, but I can't know exactly. Maybe I can predict some short term things, but who knows if some black swan event's going to happen, right? Who knows?
Yeah.
So there's a tool that goes back to, classical portfolio theory, right? It's called modern portfolio theory. And it kind of helps people figure out like what portfolio maximizes your risk adjusted returns. And that's what I like to use, right? So you have your Sharpe ratio, you have your Sortino ratio, and in this case, if you even add in US dollars to figure out, all right, well, if I want to have some cash on hand, what percentage cash should I have to maximize the Sortino ratio right now, like at
Yeah.
this point in the market, it suggests the best portfolio right this minute is 58% Bitcoin, 12% ETH, and then 30% USD. That way, as you said, you have exposure to the market, right? It's not like you don't have exposure. If Bitcoin does go to 120K, if it does go to 130K, great. You have Bitcoin and
Yeah.
maybe ETH will even catch up. But if there is a drop, you have some cash to try to buy that dip and that way, the thing that you want to avoid, and I think everyone would hope to avoid is there's always drops in the market. The worst feeling is when the market drops and you have nothing to buy it with. And I
Yeah.
think that's why having at least a little bit of cash on hand, it doesn't have to be 30%. It could be 10%. It could be 5%. It could be 20%. But having something in case that happens is usually a good idea.
Yeah. And that's what I do. I plan based on the downside potential. I plan based on the current risks, and I look for that into multiple things. The timing in the market at the moment, and I don't assume that every cycle needs to play out the same. Even things like, for example, we get a November in green, we get an October in green, we should get 3 months in green. And that thing is not playing out. I mean, might still play out a bit, right? Because we have a shallow previous month. This month is now going into the green. Who knows how we are going to close? And by the way, all those indicators from Benjamin, you can find them in the description. We have a link in here that you get a 10%, nice 10% off. So make sure you look at those and the exchanges in the description. But continuing, I wanted to mention one question, Ben, in terms of your current strategy, because I know that you look into, even though you have a very clear view of so many things that are going on at the same time, being inside your head is like having so much information. But at the end of the day, your strategy is very simple. Like I remember watching a video where you actually disclose the strategy. You say, I just look at the risk. I just look at this indicator in my website, and if it's low, then it's getting close to the time to buy, accumulate, and then it's getting close to the time to sell. So are you still doing that? Number one. Number two, where are you in that strategy at the moment? What's crossing your head in terms of those holdings? Some people were asking me on Telegram, in my Telegram, is Ben still buying altcoins? Because he say that if something happened at this time in the market, he was going to buy. And apparently that thing happened already. So they were curious if you actually are still planning to execute that on the altcoins, and which altcoins and stuff like that. Is it okay to share that publicly?
Yeah, no, I mean, one of the things about so when I was in my early 20s, like I feel like a lot of guys happens to a lot of guys, a lot of us we think we know everything, right? Every it's like we're invincible, we know everything out there. And then I did my PhD, and then I realized how little I did know. Right? I spent all my time studying one very, very specific topic. And
Mm,
even though I feel like I may be an expert at that topic, there's so many within that single topic, so much stuff in that single topic I still don't know. And you think about that into the entire world. So I think that's the kind of the thing with the market, right? We have all this information. We can talk about the 10-year yield. We can talk about the unemployment rate, inflation. We can talk about everything. But at the end of the day, no one knows what's going to happen. And so the best thing you can do is try to look at the narratives to give you an idea of the most likely outcome, but have a plan based on something that's not based upon emotions and not really based upon what my flawed observations could be. The reality the reality when it comes with Bitcoin is, let me just share my screen really quick. The reality with Bitcoin is, if you look here at the risk levels, right? I mean, this is what I use, right? When it goes to low risk, I buy. When it goes to high risk, I sell. And it's not any more complicated than that. It's easy to make it more complicated than that, right? It's easy to want to make it more complicated than that, but that's the way I navigate the market. Now, my strategy for this cycle was to essentially ignore altcoins until Bitcoin dominance hit 60%, right? And the reason I said 60% was a couple of reasons. First of all, I felt like that dominance would return back to where it broke down from back in 2021 when retail flooded the space, right? So if you remember back over here, retail investors came in mass right here in
Hmm.
March of 2021. And so my thought process was, well, dominance will likely just return back to that level. And now it has, in fact, swept that level. Furthermore, the reason why that was my strategy was, well, it wasn't the reason, but it was something I used later on. It's confirmation bias, if I'm being honest. The cycle before, we saw dominance go back up to the 0.618 fib, which is exactly what it's done now, right? It went back up to the 6.81 fib. So my argument was, just stick with Bitcoin until dominance is at 60%, because most everything else is going to bleed. And that was the reason why, everyone called me a Bitcoin maxi and saying I hated altcoins for all those years, was because, right, they're like, well, he hates alts. I mean, he just talks about Bitcoin. It was more so, I just know what happened last cycle. And last cycle, I bought altcoins in 2018 and in 2019, and I watched them bleed to Bitcoin, until the post halving year. And I was like, I don't want to repeat that mistake. I'd rather just stick with
Sure.
Bitcoin and watch all these altcoins bleed back to the king. Because with Bitcoin, I'm taking on less risk and in many cases getting a better return than a lot of the altcoin market. Now, at 60% dominance, I said, I think it makes sense to diversify some. Okay. So the first place you look would be Ethereum, right? Ethereum's number two. And when Bitcoin dominance hit 60%, it was right around here as ETH Bitcoin was putting in this low. Now, I can't be sure if this is the bottom or not for ETH Bitcoin. I do think that the low is either in or very close to being in for ETH Bitcoin. Back in 2021, I said the low for ETH Bitcoin would likely be between 0.03 to 0.04.
Hmm.
And that's essentially where it is, right? It's at 0.033. Even in 2017, ETH Bitcoin didn't get back above its 20-week SMA until March, right? It took until March, the end of February, early March, to get back above it. So I do remember that.
Hmm.
But I think you start with Ethereum. But there's something else. Like, I talked about a few other altcoins as well. One of those was actually XRP. And the reason I talked about XRP and was interested in it was because of his Bitcoin pair, right? So you have to look at their Bitcoin pair. The USD valuation of altcoins, in my opinion, is completely irrelevant, because as investors, the US dollar, the purchasing power of the US dollar is asymptotically going to zero, right? We know that because of inflation. The purchasing power is asymptotically going to zero. Therefore, it makes more sense to value your portfolio in something that hopefully is not going asymptotically to zero, and that's Bitcoin, right? um, and so when you do that, you see a lot of different trends. And so with altcoins like XRP, I know a lot of people don't like it, but as I've said before, guys, it's not about liking a specific altcoin. Don't marry any altcoin, right? It's there's Bitcoin and then there's everything else, right? Bitcoin is the unit of account, and there's everything else that hopefully you can use to make more money than if you were just holding Bitcoin. But if you're in an environment where Bitcoin is doing better than everything else, then just hold Bitcoin.
Yeah.
But the reason why XRP got my attention was because it was forming a double bottom. So that's what you look for altcoins. You look for double bottoms on their Bitcoin pairs. When they give you a double bottom, they usually get a really strong rally. And XRP is not the only one. Another one that I was interested in and was talking about was Aave Bitcoin. And I remember looking at this double bottom. And back over here, I told people on the private channels, right, that if they miss the double bottom, they'll likely get another entry as it back tests that trend line, and then it should get a move higher. It happened a little sooner than I thought, right? I mean, I thought it was going to take until December. It looks like it bottomed here in November, but the idea is there. So that is really what you look for. Now, not all altcoins will give you double bottoms, but when they do, it's usually a good thing. Look at Solana Bitcoin, right? So Bitcoin, when did the rally begin? It began basically on a double bottom. So when people ask me about alts, the easy thing is to just say, oh yeah, I'm buying this alt, that alt, and that alt, right? Because people just want to be told what to do, right? That's really what people want. They want to be told what to do, so that if the market doesn't go my way or their way, they can blame someone, right?
But does that mean
But
that? Sorry,
but
go
the
on.
better thing, sorry, I was gonna say the better thing to do rather than say, hey, this alt or that alt, is just show people how do you pick an altcoin. And one of the ways you pick them is you look at their Bitcoin pairs. If they're putting in a double bottom, if they're putting in higher lows, that's a good thing. If you're looking at an altcoin and you want to buy it and it's just bleeding against Bitcoin, lower low after lower low, then look somewhere else.
So that makes it super crystal clear to understand what's your strategy. But effectively, what you're currently doing, does that mean that you have rotated part of your BTC holding into some of those altcoins, or you're still
Yeah.
waiting for a final confirmation from other sources?
No, I mean, I was pretty clear with my strategy. I would diversify when Bitcoin dominance hit 60%. So that's what I did. Um, I could be wrong. Like, it's possible that dominance goes higher than 60. Like, it's not completely impossible for that to happen. Even in 2017, alt Bitcoin pairs were at 0.25 collectively in October and going into
Yeah.
November of 2017. So there's always a chance that dominance goes higher. But I think dominance is either topped or it's, getting close.
So my preference, not my forecast, but this is my preference. I always qualify things separately. My preference is to have a correction, to rally to 120, to take the liquidity, something big breaking, and a decent crash. I'm talking about a 50% crash. And then quantitative easing comes in. And then you get the best entries possible for the second half of 2025. I think that provides a much better risk to reward to what we currently have. At least for this particular cycle, how I see it at the moment, with so many things that are burning hot in S&P, Nasdaq, international news. I don't want to get political or anything, but there's a lot of things that are at least threatening to hit the fan anytime. And I understand why people are super bearish now. And as I explained, being bearish in this macro perspective that I have doesn't block me from taking advantage still of the market. It just means
Right.
that I take a different approach, and I have that background expectation that eventually we can see that correction, and I want to be ready for that. And one of the reasons for that is because I think that it kind of rhymes. If the cycle of 2017 was almost perfect, parabolically going up, if you look at it from the distance, it's just like a parabolic move up. People say, okay, there were corrections of even 40% in between, but if you look at it from the distance, it looks like nothing. And then you get 2021, which is all over the place. Bitcoin is drunk, go home, up and down, up and down, and everybody thinking, okay, this is the top. No, there seems to be another top coming in. Hey, now we're going to 150. No, and Bitcoin gets drunk again and goes back home, and then we are going to a bear market again. In this cycle, what I'm expecting is, well, institutions are going to save the day. Institutions are going to run Bitcoin to 500K. It's going to go to the moon, and everybody waiting for that moon coming from the institutions. And suddenly we get a macro event, something breaks all glasses, and suddenly we get a correction, black swan event, like I will say, but at the end of the cycle instead of at the beginning of the cycle. And that brings the next question, which is, if we had something similar or similar proportions to the COVID crash at the end of the cycle, like let's say mid 2025, how would you see the cycle playing out in terms of performance? How would you adapt your expectations? Would you expect a dead cat bounce later, or would you say that, you know, 108 could actually become the top?
I mean, I think in an environment like that, normally you get a dead cat bounce, right? Even if you, I mean, even the QQQ when it topped in March of 2000, it topped actually at 120, and coincidentally, and it dropped down to 60. So it got that 50% correction that you're talking about, but then it still rallied back up to 100, and then it stayed at 100 for half a year, or maybe not half a year, but like 4 or 5, like 3 or 4 months. Um, so yeah, I mean, I think if you did get sort of a black swan event, you would likely have a crash, but you would still likely have a dead cat bounce because people are gonna, hope that it's not the end, right? They're gonna hope that you get a peak at the end of the post-halving year, which is when we normally do. Um, but again, no one knows, and I mean, I think again, like the 50% drops are more likely to happen, when you get these parabolic rises. You know how we were talking earlier about where like Bitcoin sweeps a low and then
Yeah,
usually rallies off of that low? I think you use
yeah,
that to maybe make some money on this most recent move from 90K up to 100. Um, my guess, and that's what I've been using. I mean, I've been, using those like sweeps of the prior lows to sort of say, hey, like this is when it's likely going to get bounce back up. My guess is, we're all getting very comfortable with that, right? I would guess at some point in 2025, it's going to happen, and it could be later on in 2025, right? And maybe it's like the end of 2025 or something. We're all going to get comfortable with that and be like, all right, it sweeps the low, now it's time to go up, and then something bad's going to happen, and then it's just going to crash, right? Um,
yeah,
but again, and the reason I say this is normally bear markets start in the post halving year, right? The 2022 bear market technically started in 2021. The 2018 bear market technically started in 2017, and the 2015 or the 2014 bear market technically started in 2013. So
yeah,
you likely will have a drop like that at some point, but even when that happens, normally you get a big bounce. And in that bounce, that's usually where altcoins do really well for a few weeks, right? Um, so I would argue, yeah, you probably would get a dead cat bounce. And then even if Bitcoin is topped out at that point, it might not mean the top is in for alts.
yeah. And actually, one of the reasons I'm thinking that that is feasible is because I'm looking at the VIX, and we have these periods all over history where we have an expansion and then contraction, expansion and contraction. This is behaves almost like an oscillator, measures the volatility. And we got this spike in here in COVID crash. And then with this contraction that I was monitoring since September, I was calling out for an expansion just because this looks very similar to each and every single previous instance. And we were getting very close to finding some bottoming in here. And then we got this spike. But this spike doesn't really please me as the actual thing. It feels to me, you know, I grew up in Chile and there are earthquakes there. And then initially you get something that tells you that something big is coming. Then you get the big earthquake and then you get replicas. And I tend to see VIX very similar. You can see charts of earthquakes and sometimes they seem similar to this. And what you see in here is that there's this spike and then it remains there and it's just a week, right? And it was very disappointing to me to see the body of this candle just closing at 23. And it led me to believe that this is not it, that something is coming here uh, in this area, and that should look like a mix between what you have there and some of the previous ones. And the reason that we are still holding about the trend line as well is part of that conviction that I have that we are still pending with something, and it's impossible really to time the market. And I'm not here to time it or to say I have a crystal ball to say, well, there's going to be a crash, sell everything you have. That's definitely not it. I'm still holding everything, but I'm looking at it with some. I'm gonna borrow again something from you, from with some dubious speculation that could there be something in the middle of 2025, and that's gonna definitely leave things balanced towards 2021, where we have that big event in the middle, sorry, in the beginning, then one at the end, and then there should be one cycle with an actual recession. I mean, Bitcoin needs to grow up, mature into from teenager into an adult, and the adult needs to go through real, economy, macroeconomy, big circumstances, because Bitcoin hasn't proven what it can do in a real recession. Put Bitcoin in 1930, what will happen? I don't know. Maybe it's crazy to think about that.
Yeah. I would assume that Bitcoin will likely survive a recession. Um, it might be painful for a while. It probably would be. And it's impossible to predict exactly when those are going to happen. Um, but yeah, I mean, you're right. Like at some point that's likely going to happen. One of the interesting things that is a little interesting to follow is that spike by the VIX in August. And there was
Hmm.
also another spike in April, I believe, smaller spike, but there was a spike.
Yeah,
um, they actually corresponded to right after the Bank of Japan raised rates, both times. So the reason for that is because when the Bank of Japan raises rates, the carry trade gets unwound more. So people who are borrowing over there to then buy, to take on leverage or whatever it may be, they had that carry trade gets unwound. And
yeah,
so perhaps the event that you're talking about could be triggered maybe the month after whenever the Bank of Japan raises rates again. And they might raise in January, they might raise in March. It's hard to know. They're very, very cautious. Like they do not want to raise rates into anything that looks bad. They wait until it looks okay because it's such a big event. But that might be something to follow to try to time it. I just noticed that in April and August, those VIX spikes corresponded to the Bank of Japan raising rates like a week or two before.
Ben, it's been a pleasure. I just have one final personal question that is intriguing me. I couldn't ask you before we started the live stream, and I want to close down the stream with this personal question. What are the I'm going to ask you for two things. The thing that frustrates you the most with the job you're doing on the day-to-day basis. What sucks the more from your job? And second, what is the thing that makes you happier or gives you more passion to do from this job?
Well, I think there's like an expectation by people that view the channel that everything you say has to be true. And I'm sure you've dealt with this before as well, where like you talk about markets, and if you talk about markets every day, you're going to be wrong, right? Like 'cause no one knows. I mean, you're going to be wrong. And, um, it's important to admit when you're wrong. And I try to do that as frequently as I can to try to not pull the wool over anyone's eyes or pretend like I'm not. I think what's frustrating is sort of trying to deal with that side of things and wanting to have strong opinions, but also recognizing that it's okay to have a strong opinion that's loosely held, right? Like I can have a strong opinion about something, but if a data point comes in that's different than what I was expecting, then it should be okay to change your mind, right? I think it shouldn't be viewed as such a bad thing to change your
Mm,
mind about something. In fact, you could argue that changing your mind about something um, is actually harder to do publicly than just staying with what you have because that's basically admitting to everyone, hey, I was wrong, and now I'm going to position differently, right? But I,
yeah.
I think a lot of people sort of will
People
take I
celebrate
mean,
that actually.
right,
I've been
yeah,
told multiple times, uh, it's great that you admit that you were making this assumption and you publicly say, I'm going to have to correct that. That was a wrong assumption. People celebrate it. I mean, not all the people. Of course, there's always the trolls that are going to tell you, haha, you were wrong, but that's kind of part of the game.
right, yeah. I mean, I'm reminded constantly of things I've been wrong about, 5 years ago. um,
Yeah.
uh, but I mean, that's kind of the nature of social media, right? Like they more so celebrate the losses than the wins. That's okay. I guess the thing I like about it is that some people find the value in it, which is a lot different. I mean, when I was a scientist at the labs, I mean, like I felt like only two people in the world cared about what I was doing because most people
Yeah.
don't care about high energy density physics. Um,
Yeah.
but now it seems like more people care about it, but my interactions are a lot different, right? Like I'm not back then I wasn't interacting with degens on Twitter every day that were telling me why I was going to be poor because I wasn't willing to buy some meme coin. Um, but there are people out there that it seems like have benefited. Um, just from hearing, different opinions and whatnot. And I think that's the thing. You also don't want it to be an echo chamber. Like it's good to have an opinion, but then hear other people's opinions because it's a market, right? And all our collective opinions are what make up the market. So
Yeah.
yeah, the good thing is trying to, being able to help people occasionally. Bad thing is, the trolls can be somewhat excessive sometimes. But you have to learn to live with it. That's just kind of the way the world works.
Yeah, and there's also always something positive about the trolls, because the trolls create a lot of engagement. So, most of the conversations under under your posts are people trolling you about Bitcoin dominance and stuff like that, and I
Right. Well,
always find it funny.
it's also like what you said. Like you can have an opinion about something, but still be max long on the asset, right? Like
Yeah,
I bought Bitcoin in late 2022, and even to this day, like I'll talk about the risk, like I'll talk about the 10-year yield and I'll talk about that stuff, but as I've said, like
yeah,
I bought back then, I've been holding, and hopefully I can try to sell some before everything just starts crashing. Uh but yeah, and I think people have to remind themselves that like the markets go up. That's where they generally go. Markets generally go up. They have to have a reason to go down, right? You have to have a reason, and it's kind of fun trying to figure out what those reasons may be. Maybe for just the goal of being able to buy the dip.
yeah. Actually, the reason I I watch your content is not because I'm trying to find answers to questions of whether how we top, we didn't top, how high can XRP go and stuff like that. Because even if you say it, like I think XRP could go to here, I don't take it. I have learned my lesson. I never take anything from anybody. And I try to stay away from watching YouTube content related to crypto with other speculative calls and stuff like that, because the influence that that's got in the brain is incredible. When I need my brain to be clear, like a flat sheet of paper, put all the data there, write it down, and make my own plan. And the reason I watch your content is because it exposes me to a different perspective, to different data that sometimes I don't pay attention, and it contributes to the overall picture. But at the end of the day, it's my call, and people tend to make you responsible for that, but that's just silly people. Anyways,
Yeah.
thanks so much, Ben, for coming to the show. Looking forward to doing the next one, guys. Thanks so much for all the comments. It was a very intense session. So sorry I couldn't read all your comments and transfer the questions to Ben. And next time I'll do that. Thanks so much for watching. Thanks, Ben, for being here. I'll see you in the next one. Bye bye.
Thanks.